Hi, my name is Christian Waldegrave, Head of Research at Teekay, and this is our conventional tanker market update for March 2015. Now, looking at what happened to the rates last month in February, they did come off slightly from where they were in January, but they remained fairly high on a historical basis. Looking at the large crude tankers, VLCCs came down to about $50,000 per day in February, and the Suezmaxes to about $40,000 to $45,000 per day. And that's because some of the seasonal factors that were there in December and January started to ease. Some of that seasonal oil demand due to heating demand started to fade as the weather gets warmer. Some of those seasonal weather delays cleared up. And also you had the impact of Chinese New Year, which meant that there was fewer crude imports moving into China. But nevertheless, that level of earnings is pretty high compared to every year since the financial crisis. Usually the rates during February and March, they come down quite dramatically into the sort of teens or the $20,000 per day range, but this year they have stayed higher. And in the Aframaxes, actually rates held steady from January through to February. Rates in the Aframax sector averaged about $35,000 per day in March, and they were really supported by a strong Caribbean market. In the Caribs, what we saw was weather delays off East Coast Mexico and also in the Houston Ship Channel. And so in the Caribs, you had rates as high as $50,000 per day on the Aframax market for February, which is very high for this time of year. And even in the European market and the Asian market, we saw rates in the mid to high 20s or even low 30s. So as I say, as an average, as a fleet, the Aframax has earned about $35,000 per day in February. And the rates have continued to come off a little bit into March, but again, still a lot higher than we would expect for this time of year. Usually what you get at this time is seasonal refinery maintenance starts to kick in, which means that there's less crude demand into the refineries and fewer cargoes need to be shipped on tankers. But what we've seen this year is that that's been offset somewhat by good refining margins. So although some refineries have started to go into maintenance, others have maintained very high throughput because they're making such good margins in their refining process. And so they've kept demanding high levels of crude imports. And so if we look ahead to March and April, we think that although you do have the start of refinery maintenance now in Europe, you've got Asia going into refinery maintenance in April and May. We think that that's being offset somewhat by the impact of low oil prices, by the impact of strong refining margins, and we think that the rates will continue to average pretty good levels compared to any year going back to 2008. And so if we look at first half 2015 as a whole, it looks like a very strong crude tanker market, and we don't see any real changes to that strong outlook. There's a few more question marks about the second half of the year. Firstly, what is OPEC going to do with their oil production? Well, they meet next in the summer, in June, but all the indications are that they're going to maintain very high levels of oil production at around 30 million barrels per day. And so that should be very positive for the crude tanker market. In North America, there's speculation that crude oil production there might come off because the low oil price is causing people to drill less, and in time that translates into lower production. But I think there's a bit of uncertainty there. We have seen the drill rig count come down, but American crude oil production is still pretty high. And so until we actually see evidence of that crude oil production declining, I think we're not sure what's going to happen there. And it could be that US crude production stays flat, in which case you'd expect that there's going to continue to be quite a lot of crude oil in the system. That'll keep crude oil prices low, and that'll be supportive of crude tanker demand. Of course, at some point, possibly in the second half of 2015 or 2016, there's going to come a point where onshore oil inventories get filled. That might create some floating storage, but as the offshore storage gets filled, that should put the oil price down to a level at which production does get shut in, or demand picks up to meet the oversupply. In any case, at some point, we would expect that refiners and traders will start to eat into their inventory rather than keep building the inventory. So I think what will be a very strong tanker market in the first half of the year and possibly through the second half could give way to a bit of a weaker market, possibly tail end of the year and into 2016. But that's against the backdrop of very strong underlying fundamentals. So we still expect tanker fleet growth to be very low through this year, just 2% tanker fleet growth and no fleet growth at all on the crude Aframaxes and the Suezmaxes. And even when you get into 2016, we anticipate only about 4% fleet growth, but again, probably very little on the Suezmaxes and another year of flat Aframax fleet growth. So we do see that a strong market in the first half 15, possibly second half 15, might then top out some point in 2016. And then for 2017, it's a bit more uncertainty because we're not quite sure what the order book is going to look like and how many orders might get placed this year. But certainly our base case outlook is for a continued strong tanker market through at least this year into next year, but with increasing uncertainty into the second half of 2016 and going into 2017. So that's our outlook on the conventional tanker market, and we'll speak to you again next month.